Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Vici Properties, ticker symbol Vici. Full disclosure, before I start, I have to say a couple of things. I am not a financial advisor, and this is also the second biggest holding in my own personal portfolio, so keep that in mind as we go through the video because I do have that inherent bias, and do not take this as financial advice because I'm not a professional financial advisor. But over the last year, Vici's gone up 0.34%. The stock price is currently at $32.2 a share. The market cap is $34.34 billion. Price to earnings ratio is 12.32. The annual dividend yield is 5.37%. The 52-week high of the stock is $34.29, and the 52-week low for the stock is $27.98. Currently, the stock pays about a 43-cent quarterly dividend. I believe, again, that dividend yield is 5.37%, which is quite good, honestly, objectively. But for a REIT, that's pretty standard. They do specialize in triple net experiential real estate is what they call it. So they are the biggest owner of real estate in the Las Vegas Strip. I believe they currently own about 1.6 miles worth of the real estate in the Las Vegas Strip. But where this company is different than a lot of other companies is that Vici actually just owns the physical brick and mortar building for the casinos or the experiential real estate. And they essentially collect rent from the operators or the casino owners who run these casinos and, pay their landlord rent. And these guys also pay any other expense. That's the other thing that's very unique about this type of company is that because it is triple net, and this is why I like triple net real estate investment trust companies better than a lot of other REITs, is because all of those kind of liabilities like the taxes, the costs of repairs, anything to do with improvements in the building usually fall on the tenant. And additionally with that, a lot of the other things are very advantageous for the person leasing the property because the property is obviously very unique usually. You're not going to make another MGM Grand or Excalibur. A lot of these, big casinos that you've heard of in Las Vegas are actually owned by Vici. And they obviously are going to make more money, and over time they're going to take the money that they're getting. They're going to pay the dividend, which is a huge amount. But they're also going to take that additional money and either pay back some of their debt, which will put them in a better financial place, or what they're going to be doing is purchasing more properties, leveraged, which increases their cash flow, which increases the value, which brings a bigger dividend payment, and overall is a net positive. So Vici does not really have any growth concerns. Seems like they're growing at a good rate. The big concern I think that's come from Vici is the high interest rates. And, just this whole sector, I feel like, is really being undervalued for where it is. I think that we're close to really good interest rates, especially if we're going to get a new Fed chair in the next year. And especially if there's someone that's very aligned with President Trump, because what's going to happen is they're going to be cutting rates very aggressively, probably too aggressively. I think it's probably not going to be good for the broader economy, but if you're a highly leveraged real estate investment trust, you want a guy who's lowering rates. You don't care what's happening in the broader economy. So I think that Vici is going to be a positive play going forward. That's kind of my opinion on it. I think that Vici's set up to do very well. I don't think that their tenants default very regularly, and they have a good track record. For example, they just reported their earnings. I got this article from Yahoo Finance. I have the link there as well. Vici Properties, Inc. recently released Q2 earnings report indicated an increase in revenue of 4.6% to $1 billion and a net income rise of 16.7% to $865.1 million. The company also increased its AFFO guidance for 2025. Major activities included a new $510 million development loan for the North Folk Mono Casino and the issuance of $1.3 billion in notes to refinance debt. Additionally, the company has raised the investment in One Beverly Hills to $450 million, raising expectations for its future growth. So obviously the company is just dumping a ton of money to try and make more in the long term. That's kind of the business model. You put up a lot of money up front, you borrow, you leverage, you get whatever property, and then you charge rent that makes sense over the long term. Whoever's running it is going to probably be making a lot more money than what rent is worth. and they're going to be able to pay their bills. Now, the major risk that comes with that is if one of these casinos goes under, it's going to really hurt Vici. Obviously, they can probably find a new tenant to replace it, but I think it would be very difficult for them, especially because they do not outright own all of these properties, in terms of having all of their debt paid off or anything like that. So that is a risk, but overall, I think that the company is very solid, and I think that they have some of the highest tier clientele in terms of chance of default and things of that nature. I think that they have very credit-worthy tenants that they are leasing to. And I think that this company overall is set up to do very well into the future, especially if you're a long-term investor. I was also very impressed with the DCF model, but we're going to get to that part of the video later. Next up, we have kind of the analyst opinions. So I kind of wanted to segue this into kind of talking about those last earnings and how analysts are kind of reacting. We could see that 20 out of 23 have either a strong buy or buy rating on Vici. So I believe that is undervalued here. And I just want to say to everyone who watches the portfolio updates, this is probably the stock that I'm going to be unloading more money into. I may even take some tech gains and throw them into Vici just because I think that Vici is going to perform very well into the future. I think that there's a very good annual dividend there. I think that it's very low risk. I think that sometimes you want to take some risks, and when it really pays off, you want to put it into the things that are very good preservations of value. I think that Vici is an amazing tool for preserving value. I think the only one that's maybe better long-term might be waste management just because it's safer. But I think that Vici looks very undervalued here, especially when you're considering the rate cuts that are going to be coming later in the year. I think that they're also going to be able to pick up more properties, and I would expect that they're going to continually be able to increase shareholder equity. And, I really think that the refinancing is going to be the key here. I think that you're going to have an explosion of cash coming in. People really want experiences still. I think that long-term also you have to look at Las Vegas, and you have to think to yourself, would you be able to recreate a lot of these physical real estate casinos somewhere else and have the same kind of intrinsic value there? I would make the case that you wouldn't, but I also own about $6,000 worth of stock, maybe $7,000 worth of stock now. So I don't know. I think that the stock is very strong just objectively, and I'm about to show it in the DCF model and kind of go further into my opinions about Vici. Here we have the DCF model valuation, and I have my weighted average cost of capital of 5.71%. We can see here that the debt compared to the market cap is actually quite low. I think the debt is almost about half of what the overall market cap is, which is a very positive thing when we're looking at companies that normally have a lot of leverage. And, if they get into some kind of bad spell or bad quarter, we know that Vici can probably weather the storm, but I also think it's very unlikely that they're going to run into a bad quarter. But the way I found this weighted average cost of capital, if you're curious, is I took the cost of debt after tax, took the cost of equity right here, multiplied each of these numbers by their respective weighting when compared to the total value of the enterprise when adding the debt and the market cap. And I got an weighted average cost of capital of 5.71%, which I was then able to plug in for our discount rate here. I used the perpetual growth of 2.5%, which is pretty standard. And you can see here that even with a 0% growth rate, the stock is showing as being worth $42.31. And another even more interesting thing is that there's a subscribe button. And if you're still watching, please hit the subscribe button. But in all seriousness, I think that Vici is very undervalued. I do think that there are really three things. I'll actually do three things that I think are very much working against it. I think that the interest rate environment has been very negative for a very long time for Vici. It's really turned investors off. And I think that there's two prongs to look at that. There are a lot of people who live off of dividend income or live off of bonds. And those people are far more likely going to pursue government-backed T-bonds or just any kind of bond that's very secure for their just everyday living expenses and to live off of, instead of companies like Vici that inherently have a lot more risk, and you're getting a very comparable average payout in terms of 5.37% compared to what you could be getting with the risk-free rate. So it doesn't look that good for those kind of investors, the people who are already retired and trying to live off of some kind of dividend income. They've kind of rotated more towards bonds. So I think that there will be a higher demand for higher yields in the future as well. But also for Vici, who's financing a lot of loans and has a lot of debt, high interest rates very much hurt them as a business. So I think that they've really been underestimated, but we're going to see interest rate cuts at some point, and I think we're on the right side of it. I don't need them today. I don't need them tomorrow. They could even wait longer. I'm fine with that because I mean, that's a whole other conversation, a whole other video that I literally made. But I really think that you can get too much inflation if you don't cut. So I'm fine with keeping them higher now. But Vici obviously would love if someone would cut, and I think that's the way that we're going to be moving objectively. I will say, though, I also think that if you're investing in Vici, you're probably not going to get the kind of alpha that we're going to see from AI inventions and just AI technology going forward. I'm fine with that. I kind of just want to invest in some very safe stocks. I want to get my Vici investment up more, especially while I view it as cheap. Again, I'm not a financial advisor. It's not financial advice, but just from my opinion and the way that I've modeled Vici, I think that it's very cheap. I think that this is the stock that I'm going to be adding going forward. I think this, potentially Waste Management, depending on kind of where it ranks. But I think that it would be very realistic to see like a 3% growth in the free cash flow for Vici. And that would result in obviously it being 80% undervalued. I think that there's something I'm obviously not seeing here. There is always the risk that tenants could default. It is a very boring business. But I think that for the price, honestly, I'd be happy. I'm going to raise my price that I'm willing to buy at. I'm willing to buy Vici, I think, $35 and below, and then I'm just going to add Vici at that point. Maybe, you know what? I'll even go $38. At $38 or below, I'll buy some Vici. I'll load up on it. I think that puts me at, let's see, $38 would be like what, -1? Yeah, I think -1. Yeah, 37.91. I think it's a steal at 38 or below. That's all my personal opinion. I could be totally wrong. Full disclosure, I feel really bad when someone makes an investment based off of a video I make. Please don't do that. Do your own research. But in my opinion, I'm going to be buying more and then documenting the results. Then I'll keep you guys posted. Thank you for watching this stock analysis video. I was really excited to take another look at Vici, and I think that the numbers are pretty good, and I think that they're going to continue to grow it. I really like management, and I really like this business. Please hit the subscribe button. Thank you for watching. Bye.